Myindustry Consulting Group, MCG.
Okay, imagine this. You hear about a market. Reports say it's worth like tens of billions of dollars.
Yeah, huge numbers.
And projected to hit nearly 100 billion pretty soon. Sounds massive, right? Like some kind of economic juggernaut.
Definitely sounds impressive on paper.
But what if the reality, what's actually happening on the ground, the real sales, what people are buying, what if it's just wildly different?
But that's exactly the situation we're looking at today.
Precisely. Today, we're taking a deep dive into the Iranian energy drink market.
It's a fascinating case study, really. And our insights for this, they come from a very recent, very detailed field study. It was done by Myindustry Consulting Group, MCG, just in the first half of 2025.
And it gives a much more grounded view.
Right, exactly. Based on what's actually happening there.
Which is what we want. Our goal here, our mission, is to pull out the key takeaways, the really important bits about consumer habits, who's buying, the brand battles, how retail works in this pretty unique market. We want to give you the shortcut to being properly informed, to get the real story behind those flashy numbers.
And why Iran?
That's a good question.
Yeah, why focus here? Well, it's a market that's really changing. You've got this large young population, more people moving to cities, and this growing interest in fitness and mental performance.
So lots of factors converging.
Definitely. It makes it a really dynamic place to look into.
Okay, so let's start with those really big numbers you mentioned. Databridge Market Research, they put the market value at USD 46.02 billion in 2024.
46 billion.
And projected to jump to, get this, USD 90.01 billion by 2032.
Wow. I mean, that sounds almost unbelievable, doesn't it?
It does raise eyebrows.
And here's where it gets really interesting. You have to put that number next to Iran's total GDP.
Okay.
Which is floating around, say, USD 500 billion.
Right.
Now, if that energy drink valuation was anywhere near accurate, that would mean energy drinks make up something like 10 to 18% of the entire country's economic output, which is, well, it just doesn't seem plausible, does it?
Exactly. That's the aha moment. It just doesn't stack up on a macro level. An entire tenth or more of the economy from energy drinks. It feels off.
Yeah, and you see this sometimes with global market research models. Maybe they're based on indicators from other places or models that work in more open economies. They might not fully capture the specific local realities.
Like sanctions, maybe? Or just average wages?
Exactly. Things like sanctions, actual purchasing power on the ground, specific distribution hurdles, they might miss those. So MCG comes in with this much more, let's say, reality-based estimate for 2025.
Based on their fieldwork.
Right. Based on tracking actual sales, actual prices. They calculate the total annual market value at $76.8 million.
$76.8 million compared to $46 billion.
A huge difference, and they break it down. It comes from about 160 million units of the standard 250 milliliter cans sold each year.
Okay.
At an average price of around 33 cents each. So that's about $52.8 million right there.
Gotcha.
Plus another 30 million units of the bigger 500 million Agredo. Those sell for about 80 cents each, adding another $24 million.
So $52.8 million plus $24 million gets you to that $76.8 million total.
Precisely. It's built from the ground up, based on volume and price.
So it's not just a smaller number, it paints a completely different kind of market, doesn't it?
Absolutely.
The key takeaway seems to be that this more realistic number actually reflects how people buy, what they can afford, how things get distributed in Iran. It positions energy drinks as more of a fast-moving consumer niche.
Right, not some dominant force driving the whole economy.
Yeah, exactly. What does that distinction mean for someone, say, looking at this market, maybe thinking of investing or just trying to understand it?
Well, it's critical. It means you're targeting a very specific group. Often people with particular needs or lifestyles. It's not like selling bread or rice. It's not quite a mass market staple in that same way. And understanding that niche positioning is really important, especially when you think about the wider economic situation and how that shapes what people prioritize buying.
That makes a lot of sense. So we've got a clearer picture of the market's actual size. The next obvious question then is, well, who's actually buying these drinks? Who's driving this demand?
Right. Who are the consumers? And what makes them grab an energy drink?
Yeah.
The study shows some really clear patterns here, looking at how often people drink them. 32% are daily consumers.
Wow. Almost a third drink them every day.
Yeah, it's quite high. Then 41% have them maybe 2 to 3 times a week.
Okay, still pretty regular.
22% drink them weekly or less often. And just 5% are in that sort of monthly or very rare category.
That 32% daily figure is striking. What does that level of frequency tell us? Are these drinks just like part of their daily routine?
It seems so. It suggests they're really integrated into specific parts of the day or week for a lot of people.
And when are they typically drinking them?
The study points to a few key times. During work hours is common, before exams for students, or just before hitting the gym or doing some kind of physical activity.
Okay, so very purpose-driven moments.
Exactly. And the study kind of breaks down the users. You've got the daily users, often younger adults, maybe in demanding jobs, athletes, or even people just trying to manage lack of sleep.
Right.
Then you have the more moderate users. Think university students, office workers maybe, who use them more as a short-term boost when they need it, a quick mental pick-me-up.
And what's driving them? You said purpose-driven. What's the main goal?
Overwhelmingly, it's about function. People are goal-oriented, as the study puts it. They care more about what the drink does than how it tastes or what the can looks like.
Interesting. So what are the main functions they're after?
The biggest one, by far, is boosting energy and fighting fatigue that accounts for 49% of why people drink them.
Almost half. Okay.
Then enhancing focus and mental alertness is next at 22%. Improving physical performance is 17%. Taste and just simple refreshment, only 8%. And following trends or social influence is even lower, just 4%.
Only 4% for social reasons. That's quite low compared to maybe other markets.
It is, although the study does note that social media trends are starting to have a bit more influence, especially on the younger drinkers. But still, function rules.
So this heavy focus on function, what does that suggest about maybe the lifestyle or the pressures facing young Iranians? It sounds less like a fun drink and more like a tool.
That's a good way to put it. For many, it seems to be a practical, functional purchase, and the demographics really back this up. It's definitely a youth market.
Oh, yeah.
A full 80% of consumers are under 35.
80%.
Yeah. Breaking it down further, 46% are between 15 and 24 years old.
Teenagers and very young adults.
Exactly. And another 34% are aged 25 to 34.
Okay, so the core is really that under 25 group. What about gender?
Historically, it leaned heavily male, about 68% male consumers, but that's shifting. Female consumption is growing, now up to 32%.
Interesting. Any particular group of women?
Yeah, the study highlights fitness-focused women in urban areas especially.
Okay, so summing that up. A young consumer base, increasingly diverse in terms of gender, and really focused on performance and function.
That's the picture.
So that naturally leads to the next question.
Yeah.
In this kind of environment, which brands are actually winning? Who's capturing these consumers?
Yeah, the brand battlefield, it's pretty intense, but what's striking is how much local players dominate.
Really? Not the big international names.
Not primarily, no. The study identifies the main domestic brands as Hype, Big Bear, Edge, which is made by Sunic, a big local company, Happy Life, and Lifestar.
Okay, quite a few local names there. How does the market share break down roughly?
Hype is the clear leader, holding around 30 to 35% of the market.
Okay, a solid chunk.
Then you have Big Bear, Edge, Happy Life, and Lifestar. Those four combined probably account for another 25 to 30%.
Right.
International brands like Red Bull and others, less than 10% total.
Wow, less than 10% for all the global players combined.
Yeah. And then the rest, maybe around 30%, is made up of various other smaller, low-penetration local labels.
Okay, let's unpack that local dominance. Hype is leading. How did they get there? And how do the others, like Big Bear or Edge, carve out their space? Sounds competitive.
It is. Hype's leadership comes down to a few things. One is being the first mover. They've been around a long time.
Okay. Brand recognition.
Huge brand recognition, exactly.
Yeah.
And they built a really solid distribution network over the years. They're everywhere, urban areas, even reaching into more rural shops.
Impressive reach. What about Big Bear?
Big Bear seems to aim squarely at the fitness crowd and younger guys. Their branding is sporty. They have strong ties with gyms, supplement stores.
Okay, clear targeting.
Yeah, they position themselves somewhere between pure performance and being affordable.
Makes sense. And Edge, you said that's from Sunic.
Right. Sunic is a major Iranian company, especially known for juices. So Edge leverages Sunic's massive existing retail network, think supermarkets, modern stores.
Piggybacking on the parent company's strength.
Exactly. That plus the strong Sunic reputation and, crucially, local pricing have let Edge scale up incredibly fast.
Smart strategy. What about the other two main locals, Happy Life and Lifestar?
They seem to have slightly different angles. Happy Life goes for the younger demographic with like trendy packaging and lifestyle marketing. You see them a lot on social media, popular in convenience stores, near universities.
So more about vibe and trendiness.
A bit more, yeah. While Lifestar seems focused purely on the price-conscious consumer. They offer affordability, they're available pretty much nationwide, and they rely on that basic trust and accessibility.
Okay, hitting that budget segment.
Right. Sheer availability and a low price point.
So it's not just that they're local. It seems like these domestic brands are actually quite sophisticated in segmenting the market, right? Targeting different needs and price points.
Absolutely. They show a deep understanding of the different consumer groups within Iran. It's not a one-size-fits-all approach.
Which brings us back to the international brands like Red Bull. You said less than 10%. Why so low?
Several big reasons. Sanctions obviously make importing difficult and expensive.
Okay.
The import costs themselves, even without sanctions, are high. And that means they just aren't widely available everywhere.
So limited distribution and high price.
Exactly. They end up appealing mostly to a very small niche, maybe luxury consumers or people specifically seeking out that global brand name. I mean, think about it. A 250 milliliter can of Red Bull costs around $1.90.
$1.90. Compared to the local ones?
Around 33 cents for the same size.
Wow, nearly 6 times the price.
Yeah. So it's just not competing in the same league for most consumers.
It's a really powerful example, isn't it, how local players, even in a tough economic climate, can really dominate by understanding their own market's needs and constraints better than the global giants sometimes can.
It really is. Shows the power of local adaptation.
So this leads us neatly into price and place. How much do these things actually cost day to day, and where are people buying them? You mentioned the prices briefly.
Yeah, as of the 2025 study, there are pretty clear pricing tiers. That standard 250 milliliter metal can, the most popular one, goes for about 30 to 35 cents US, very accessible.
Okay.
The bigger 500 milliliter metal cans, often positioned for like higher performance or longer use, they're more expensive, around 81 to 90 cents.
Right, double the size, more than double the price often.
Pretty much. And then there's another format, these 1 liter PET bottles. They're aimed at the really budget conscious or maybe people consuming a lot. They cost around 70 to 80 cents.
Wait, the 1 liter bottle is cheaper than the 500 milliliter can.
Often, yes. Lower cost per unit of volume, different packaging, maybe different formulation focus, targeting that value segment.
Interesting pricing strategy. So how do these different price points match up with the consumers we talked about, and where are people actually picking these up?
Well, the low price of the 250 milliliter cans makes them really easy for those young daily users to grab regularly for that functional boost.
Right, fits their budget and need.
The larger cans or bottles appeal more to those needing sustained energy, maybe athletes or people buying for multiple occasions or sharing. And where do they buy them? The overwhelming majority, 61%, comes from local grocery stores and neighborhood markets.
61%. So small local shops are key.
Absolutely dominant. Then you have sports clubs and those little on-the-go kiosks. They account for about 18%.
Okay, point-of-need locations.
Exactly. Hypermarkets and bigger chain stores make up 12%. And online platforms, like the big one, Digicala, they're growing, but still relatively small for this category, around 9%.
9% online. That seems low, maybe, but it makes sense if it's an impulse buy, right?
That's the key factor. Despite online growing for many things, energy drinks seem to remain a high turnover product that people often buy on impulse.
I need energy now.
Pretty much. Or they grab it at a specific point of need, like the gym right before a workout, or a small shop on the way to work, or an exam.
So what does that impulse nature mean for the brands? How do they need to think about distribution and marketing?
It means being visible and available right where that impulse strikes. Hyper-local availability is just crucial.
Got to be in arm's reach.
Exactly. Brands need to be in those small shops, near the universities, at the gyms, corner stores, kiosks, anywhere someone might suddenly feel they need that boost. This is where those strong distribution networks of the local players really give them an edge.
Makes perfect sense.
Yeah.
Okay, so looking forward then, it sounds like a market with some pretty strong fundamentals driving it. What are the main things expected to keep it growing?
There are a few key drivers. First is just the demographics that young, urbanizing population with busy, fast-paced lives isn't going away. That provides a strong base.
Right, the core user group is still growing.
Second is innovation from the local brands themselves. They're constantly introducing new flavors, different packaging styles, trying to keep things fresh and interesting for consumers.
So competition drives innovation.
Definitely. And third is the continued expansion of distribution. Even though local shops dominate the growth of e-commerce, however small currently, and modern trade channels like supermarkets, it all helps improve overall availability across the country.
So demographic momentum, local innovation, and bitter reach. Sounds positive.
Yeah.
But are there potential bumps in the road? Any challenges that could slow things down?
Yeah. Every market has potential headwinds. One is the possibility of increasing regulatory pressure. Governments sometimes look at caffeine levels, sugar content, marketing to young people.
Health concerns, basically.
Exactly, which ties into the second point, growing public health awareness campaigns. As people become more conscious of sugar or stimulants, it could influence their choices.
Makes sense.
And finally, just the broader economic situation. Any major economic fluctuations could obviously impact people's spending power, especially for non-essential items, even if they are functional.
Right. Economic uncertainty is always a factor.
So to kind of wrap things up, what the MCG study really shows is that Iran's energy drink market is, well, it's pretty mature in its own way. It's diverse, it's highly competitive.
Dominated by locals.
Dominated by local brands who are clearly thriving. Consumption is remarkably high, especially among young people. And crucially, buying decisions are driven primarily by that immediate functional need for energy.
Yeah, much less about global brand status or just taste, more about what does this do for me right now?
Precisely. It's a very practical market in many ways.
Okay, so thinking about all this, here's maybe a final thought to leave our listeners with. Given this deep dive, what does the success of these local brands in what's clearly a challenging environment tell us about consumer markets in other regions that face maybe similar economic or social complexities? And looking ahead, how might that kind of local ingenuity keep reshaping industries, even ones where global brands usually dominate?